Welcome back to Morning Markets. Today we'll have a look at the results of the German election and take a look at some of the key events over the course of this week. US Treasuries gained last week, providing positive returns for investors after the release of the Federal Reserve Minutes, which demonstrated a willingness to hold interest rates at their current level until they see inflation dynamics start to improve. So bonds offered a diversifier within multi-asset portfolios. Global equities were negative on the week, down around 1.6% in sterling terms, just given a raft of concerns of geopolitical tensions along with signs of a slowing consumer spending, which really weighed on market sentiment through the course of the week. The week actually started very positively through Tuesday and Wednesday with the S&P 500 reaching record highs, but we did see some losses come through towards the back end of the week. Geopolitical developments were the key aspect there, with Trump's focus on the Russia-Ukraine conflict, as well as the announcement of potential new tariffs to come in against automobiles, pharmaceuticals and lumber as well. So quite broad-based in terms of their focus there. We also heard from Walmart with their Q4 earnings, which were pretty constructive, actually, showing that there was an improvement in sales growth and also profits, but over the year ahead, expecting the sales growth to slow by around 1%, given slight weakness in terms of consumer demand starting to come through. But they are combating this through their consumer loyalty membership programs as well, which are proven to be quite effective for the group as well. As we look over the course of this week, we're going to have the personal consumption expenditure, so the PCE report from the US. This is going to be really important to demonstrate some of the headwinds which the consumer is currently facing. Personal spending growth expected to slow to around 0.2% in the month of January. But if we look at the economy, we get the second estimate of Q1 GDP for the US, and that's expected to remain firm at around 2.3%. So still very strong economic growth, which is coming through in the US, more than double the growth which we're expecting to see in the UK and in Europe as well. And durable goods orders are expected to accelerate by around 1.3%. So some positive economic growth data are expected to come through, but we are expecting to see signs of a bit of a slowdown in terms of consumption spending. We're going to hear some earnings reports from some of the big players in the States this week, including Nvidia, Home Depot and Salesforce. So we'll provide an update on all of those aspects. In terms of Europe, last night, German Conservatives secured the election win. Their next steps will be focused on forming a coalition with the Social Democrats. It's quite an important result. We're seeing signs of stagflation in Germany. We're seeing the economy which is really slowing down, and therefore it's going to be really important how they go about regenerating economic growth. So fiscal spending plans will really be in focus. And as a result of the election result, we saw the euro strengthen by around 0.5% against the US dollar. We're going to get some inflation data from Germany as well. We're expecting to see inflation hold at 2.3%. We are expecting also to see signs that although Germany's economy has been weaker, consumer sentiment is starting to improve. So we'll get a business climate index and a consumer survey index coming through this week, which we'll provide an update on. And in terms of Asia and Japan, Japan's probably the key area where we'll receive data this week. We'll see release on retail sales, industrial production, and also housing starts as well to give an indication of the health of the Japanese economy. So a better week for bonds, a slightly weaker period for equities given geopolitical tensions and signs of a slight slowdown in the consumer. But note, these are coming from a very strong starting point. Consumers have been in a very strong position and they've been key to maintaining positive economic growth globally. Thank you for watching.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.